think really what we're looking at is a realignment of the difference between the mature markets growth slowing, but also the emergence of the domestic economy now taking more prevalence in the emerging markets. And so if anything, it's a little bit of a rebalancing.
Well, our view hasn't really changed. Yes, there has been a lessening of growth rates in terms of forecasts and what's being experienced in the market, but growth in emerging markets is still considerably higher than many parts of the developed world.
While we do see the forecasts being on a downward trend, I'm still very optimistic. These markets are starting off, of course, a very low base, and that myself and my clients putting in place the relevant infrastructures can take advantage of what's happening in those economies.
If we look at where consumer wealth is developing in those emerging markets, I think growth will remain strong in most of those markets for the time being. Maybe not at the high rates that we've seen previously, but it'll certainly be more sustainable at the levels that we're much more comfortable with, the 4 and 5% marks.
I think that companies on the whole, when they look at emerging markets, they have to take a much more micro approach. So the era of globalization in which we are right now means that trade relationships are more complex. So you have to look at each country on a very individual basis. So how do their particular policies affect my business? So geopolitical events and shocks and crises, these are going to have a much larger effect on the decisions of manufacturers and other kinds of industries and firms in general.
I continue to feel that the potential is enormous, and you have to have the sort of staying power to go in early, stick through the tough times, ride out the volatility, and capture the growth and the value. And I think that's how I see agility. I think emerging markets will continue to be very important for agility.
So some of them are looking to invest and see, particularly in the IT technology aspects, and see what they can do more in terms of optimization of their businesses, both in terms of reduction in cost and in terms of achieving better efficiency in terms of handling and shipment as well as movement of goods.
If you look at the way global supply chains are today, emerging markets are just so essential, both as manufacturing hubs but also as the growth markets for consumer demand. I mean, if you look at countries in the Middle East, if you look at Indonesia, even Africa with a growing middle class in many countries, people are looking to the emerging markets for growth, and I think we'll continue to look to the emerging markets for growth.
We think that with the trends occurring in nearshoring, auto production, and heavy industry, that in fact in China and other Asian countries, we think that the best opportunities will be in the fast-moving consumer products area, retail areas, food, restaurants, those kinds of industries.
There's still enormous growth, of course, to be had in China. It may well be a large market now and very much a developed market. The e-commerce sector particularly, which we advise a lot on and we've been working heavily in for the last several years, has vast amount of room to grow. In terms of particular countries, we still see Africa as the shining bright star on the horizon.
I think that emerging markets are growing. Also, particularly in agribusiness, you're seeing the larger trend towards emerging markets trading with each other. So you're seeing Brazil send poultry, sugar, these kinds of big agricultural commodities to markets in Asia, and that trade is growing very, very quickly.
From an Asia standpoint and where we sit in as a software provider from Keeble, the biggest significant growth in the target segment that we're working with is on the e-commerce logistics. E-commerce in Asia is actually significantly growing, and it is expected to overtake US this year, but probably it's going to take into next year. This year the forecast for e-commerce overall global sales revenues to be about $1.47 trillion.
Well, I don't necessarily agree there is a lessening of enthusiasm for emerging markets. Yes, the growth rates in the economies may have dropped, but I think in many ways that's a good thing. Some of the froth has been taken out of these markets. We're seeing things becoming a lot more stable